Let's talk about the markets on the back of the MPC's decision not to change interest rates, but also we're told that things are going to change significantly in Kenya this year. Some of those taxes and fuel price cuts that were introduced would be reversed this year because it seems as though the inflation situation could be turning. What impact is that going to have?
Obviously, there's a great concern in the market about the removal of those tax subsidies, however marginal they were. But I think we are seeing a situation where we should be bracing for more upward pressures on inflation. I mean, if you remove all those tax subsidies, I mean, these are very key essential products and commodities in the market that really constitute a huge portion in the CPI basket. So if actually if you were to remove those tax subsidies, then we are looking at inflation numbers edging upwards going forward past the end of this fiscal year.
Yeah. Okay. Another interesting decision that's come through is from the High Court on the possible postponement of the elections. Is this the kind of, I'm going to say it's uncertainty. Certainty in that the elections will be postponed so that they can be prepared for adequately. But uncertainty in the sense that for investors, it's another year of a government of national unity and no clear mandate for any incumbent president.
Absolutely, absolutely. I have to agree with that. Obviously, there's a lot of unknowns around the election dates. But one thing is there's a high likelihood that we will not have the elections in this year. So if you look at the court decision, obviously all the two options that the three-judge bench delivered in today's ruling, they all point to an election in 2013. So obviously we are looking at another year of prolonged election overhang in the markets, you know. So investors will still be assigning political premium, risk premiums to stocks and all assets this year. But obviously we would have wanted it to come forward, but as was planned in December. But now again, we probably are set for another 3 months without a president. You know, that's a bit of uncharted territory for Kenya's political scene.
Give us an understanding or an indication of what that political risk premium would be, because the Kenyans have indicated that this was the year they wanted to go to the international markets with a sovereign bond. So the pricing of Kenyan risk, considering the political factors, considering the inflation factors, considering Kenya's vulnerability to international markets, what does that mean for a debut bond, if at all it happens?
Obviously, still global investors, they will still be assigning quite substantial political premium risks to any asset class in Kenya, largely coined around the political scene and the election cycle. And then you also have, coupled with that, you also have the International Criminal Court ruling in the offing, you know. So floating a debut Eurobond this year, obviously, you know, you won't get threshold performance. I think there's a bit of cautiousness from global investors when they're approaching the markets locally here.
All right, George, let's talk about what's happened in the markets today. A good showing for Standard Group, but some would argue the trading volumes were really thin. It's not a lot of shares that traded, but they still lifted the stock.
Yes.
Your opinion on that?
Oh, sorry, I beg you to check that again.
Talk to me about the Standard Group and what lifted the counter today.
I think it's immaterial, you know. It was largely exaggerated on thin liquidity. I mean, if you look at that, it's only 100 shares, you know. So I think in as far as contribution to the market, I think that was a bit exaggerated, you know, principally on thin liquidity, you know.
TransCentury also flip-flopping. One day it's up, one day it's down. Firstly, talk to me about TransCentury and the attractiveness of this counter. But secondly, the investment firms in general. I mean, British American has already issued a profit warning. There is a sense that a lot of these companies that came to market this year have really underperformed because the conditions were just working against them.
Yeah, absolutely. They came in the market at the peak of the bear run. And when a time when there was a lot of investors' worries were actually boiling down to macro and financial fundamentals, and there was also a lot of geopolitical risk premium in the market. So I mean, the investors were, to use the word unfairly, punishing stocks everywhere, left, right, and center. So I mean, it was just not the right time for them to come in the market, but I mean, they had to come. I mean, you look at a stock like British American Insurance Company. Obviously, they issued a profit warning this week, but it was forthcoming. I mean, equity markets returning about -28% last year. I mean, a huge portion of the investment in the market, they had to issue a profit warning, you know.